Hey, it's Christmas Eve, it's the 24th of December. Just doing a crypto update because altcoins really are popping. In legacy markets, the Santa rally is normally in between Christmas and New Year. However, quite a few years in crypto, we have seen some really wild moves while the holiday is shut, and most bigger trading firms, which I think were a lot behind a lot of the kind of freaky moves, used to shut for these holidays, and I think that that's why lower liquidity, lower volume, and we can get some really kind of interesting moves, and that's certainly what we're seeing at the moment. Also, the consolidation of people are talking about, Bitcoin's the only thing not rallying. The consolidation in Bitcoin has been really bullish. It's really not giving up any ground. And we're now, only 2 weeks away, really, less than 2 weeks of trading days anyway, until we get the ETF decision from the SEC. So the question of that is going to be really which cryptos are going to rally most once we get that ETF out of the way. I have said that I kind of think that ETH against Bitcoin is setting up to rallying. And that's not just, I think, because of the ETF, but because mainly there's stuff going on in Ethereum's ecosystem. The ETH developers have finally confirmed that January the 17th is when the next upgrade, the Dencun upgrade, I'm probably said it wrong, is going to happen. And that's going to, fuel its level 2s, and some of them are already pumping. And ETH coins are already pumping, I think, in anticipation. Also, we've got, the huge rally in Solana and the meme coins. And so there's quite a lot of interesting stuff going on in the altcoins that have nothing to do with the ETF and the ETF adoption. Now, so in crypto space, and the macro factors in the crypto space are all kind of really positive. However, in the bigger world, unfortunately, there are real stressors that could affect the market, and that could, I think, potentially affect Bitcoin. As you know, I'm not a big fan of the theory that Bitcoin's cycles are based around the halving. I do think a lot of Bitcoin's boom has come from liquidity, and it would have been therefore really bullish if the Fed had cut, if the Fed had cut rates soon, March, April, so on, and inflation continues to fall. That would be very good news. That extra boost of liquidity in the system has been previously very, very good news for Bitcoin and therefore crypto. However, the stuff going on in the Red Sea, the blockade in the Red Sea, and it's really affecting kind of 15% of world shipping and massively increasing costs for those ships that have to go around the Horn of Africa. And that is going to be really inflationary. Let's not get ourselves, and if inflation goes up again. Now, the Fed can't hike rates to get ahead of imported inflation caused by something like this, but they can't also cut rates in the face of it. So if we're expecting, a really kind of fantastic rally thanks to the Fed cutting rates early, and that continues in the Red Sea, and we get a real spike back in inflation because of it, that's going to put a dampener on everything. And so outside of crypto, that is one thing to watch out for. There's a few other things, China and the US tensions over microchips seem to be escalating, and yeah, that potentially, affects all of the AI stuff, and so we need to be a little bit careful. But in terms of money printing and the Fed cutting rates, those are the things that kind of could push the Fed off course. So the money printing should make all of the markets pump, including crypto. So any delay to that will be a negative. Let's bear that in mind. Okay, let's take a look at the charts. I've waffled on long enough. I am finding everything pretty difficult. So here's the bullish consolidation that we talked about. And this is a 4-hour chart. If we go to the daily chart, and put regular candles on, you can see that we are sideways, very close to the highs around 44,000. And on the weekly, you can see there's no pullback at all. We're just going sideways here. And we're going sideways around a big 50% level from the high that we made in November 2021 to the low we made in November 2022. And sometimes around these 50% levels, you do that. They're normally pretty sharp. Let's take everything else off here, all the noise off. So not a reversal, potentially a very nice wave 4 for another leg higher. And if I put in my 61.8 fib here, that would be the next upside target, which is at 48,580. But I really think, as you know, I'm looking at my fibs a different way. So I'm looking at my fibs all the way down here from the all-time lows to these all-time highs like this. And I'm saying, you know, this is, I think, even if we take this most recent 5 wave here, this is a reversal of a 786 fib holding above the 61.8, and that would normally mean 38.2, which would be 50,000. There it is, where we are. So, sorry, it's 43,800. Now, if we continue higher, we go to the 236 fib or this swing high, I think, next, and that does get us closer towards that 50,000 level. Big because we've done this 786 38.2 pattern. I think we're going to get a spike, as I said many times. I think we're going to get a spike when the ETF is announced, and then I think that we could see a little bit of a pullback. But as long as it's not like a market crash, altcoins should do really well, and it's looking like pretty good, like all season. If we go back to the start of the last bull run and imagine this is where we are now, so the last bull run back here, off the lows in 2019, you can see that from this high that we made in 2017 to 2018, we did in this, let's take this off, we did pretty similar things here. You know, we kind of went sideways here at this 50%. We did tag this 60% level, and then that was it. Wave 1 was over, and we did a really deep retrace before we did the next leg higher. So whilst I think that our low, very much like this low in 2018, won't get retested once wave 1 is over, you know, because Bitcoin tends to start slowly, we could see quite a deep pullback here. Look, imagine we're doing the same thing, and this is just a kind of fractal. Here's our high to low, here's our wave 1 that we're waiting to finish, and then the next pullback could be quite deep before we continue higher from here. So this is why it's really good to learn to trend trade. This is why it's really good to learn to see reversals. And when we look at this on the daily, you can see we've got no daily reversal here. But here, if we go back to where we were in April, you know, when we lost these daily moving averages, each time we saw a bigger pullback and quite a long way. In each one of these cases, you know, we had a 50% pullback, I think, from this first low, didn't we? And so 61.8. And again here, when we did this pullback, when we lost the daily moving averages, we did a much bigger pullback here to the 50%, twice to this 50%, and then off we went again. So we need to be a little bit careful if we start losing these daily moving averages, which you can see on the daily we haven't even come close to. For this whole rally, we've ridden them really nicely. But if we start to lose them, or if we were to lose this 50 for sure, which is at 40,000, we're going to see a bigger pullback. So at the moment, I say as long as we hold 40,000 on any kind of awfulness, everything is good. But once we do, we could see a bigger pullback and a bigger 50%, so on. So nothing to do here in Bitcoin except we're all waiting for this ETF decision. And until it comes, I really do think if you take profit in some of these altcoins that are rallying really nicely, when you take profit, I don't think it's a bad idea at all to go into some of these bigger blue chip crypto like Bitcoin or ETH. Okay, that's where we are then with Bitcoin. Let's take a look at Ethereum, which is doing very similarly. Here, if we look at the daily chart, you can see we are riding our daily moving averages very nicely. Not ruling out another swing lower, but unless we lose this daily 50 moving average and these previous highs and lows, which we identified previously here at 21.30, Unless we lose 2130 in this daily 50 moving average, we are still sideways in an uptrend, sideways consolidation. And as you know, I've got a big level I'm watching in ETH Bitcoin for a bottom. If we take a look at ETH Bitcoin, I'm going to use the Bitstamp chart because it's got the most history. 0.0462. I think this is where ETH Bitcoin will bottom out, and we will be able to start backing up the truck and buying some. So that's where we are then with Bitcoin and ETH. Let's take a look at a few interesting charts. And some of the, not all of these are requests, some of these are my choices. And my first choice here is, this is Ethereum Classic. And if Ethereum is going to do really well, you know, Ethereum Classic could do as well. Look at this lovely bottoming pattern we've got here. But what I'm really interested in is how, I ignore all my red lines, but how for the first time we've gotten above these weekly moving averages and we're holding them. So although we're in a sideways range, you can see each time previously we went back to these weekly moving averages and got rejected and went back to the low of the range. This time we're holding above them, so that's 18.7. And we haven't broken out from these highs, but I think when we do and we get above this weekly 200 moving average, which is pretty new, we have a good shot at the bottom being in and at least another swing higher. Now, if we measure the first big rally that we had, which was June last summer, you can see we're pretty close to a double bottom. So it kind of says retest the highs and then 61.8 retrace. So let's go to regular fib retraces this way and go level to level to level. Because for the first time, I think we might have a little bit of a go at holding above this 236 fib. Since we had this low here, we tried it but couldn't have a weekly close above it back in June. And this time it looks like we're going to, and therefore more upside. So the next upside is going to be this swing high in the 38.2 fib, which is at 25.25, and then above 25.25. As you know, my first target is going to be 33, which is that 61.8, and so on. But for me, particularly with these weekly moving averages, this looks like it's building a pretty nice base to launch from. And when ETH goes, sometimes, you know, something goes first and you think, damn, I missed it. If ETH goes first without you, I would put ETC on your Ethereum Classic on your list to see if that isn't going to be a good kind of follow-on trade. And some of these really OG coins are doing really well. For example, here's Dash. Let's look at this on the weekly. This, again, above the weekly 20 moving average, holding support. We did it here and couldn't launch. Maybe this time is the time. Now, it may be in Dash that all we do is come back to this weekly 50 moving average and these previous swing lows. But for the first time, it's pretty much hard to find an altcoin that isn't having a go. So a breakout from this sideways range here that we're in, next swing higher should take us to 40 and a retest of that weekly 50 moving average in Dash. Now on the short term, is there a buy here? Not right now. Look, let's go to the 4 hour, because we're really kind of a little bit stuck for me in this sideways range, making big 3-wave moves, but definitely one to keep an eye. I've got my eye on it. So what I would like to see here, it is a daily buy. This for me, normally a daily buy like this, I like to see a 4-hour pullback and take 4-hour pullback. So it's not a good bet tonight, but over the next couple of days, it definitely could see another swing higher. Okay, let's move on and look at some more. I see a lot of people slagging off Bonk and stuff, and you know, for me, Bonk's not dead yet, but let's do some more. Let's look at, I'm going to go through them all and look at them all as fresh charts with you so that we are looking at them together. Here is Sand. Now this is a very interesting chart. Look here, because First off, I think we're down at this 942 level, but for the first time in the weekly, just like a lot of these charts in the altcoins, we're holding above these weekly moving averages. Now we've got a little bit of a level here around 0.6, but if we can rally from here, our first target is going to be back to this really tough resistance level at 0.975 and the 886 fib. Let me put that 942 in, and then you can see what I mean. 942, 943. There we are, above it and holding above it. So 0.497, and this weekly 50 moving average is where we're wrong to be bullish in sand. Here's our highs and lows, and if we can hold above it, next upside target here is 0.975, and yeah, potentially we could see a really big. Now, you know the fib rules where we say, well, if you reverse it to 786, you go to 38.2, and 886, you go to the 50. Well, if you reverse it on 943 or hold above it, normally it's a 61.8. I'm going to be really careful with this one and say let's get some of these levels out that reverse the downtrend first of all. And so 0.975, and basically that round number 1 is going to be the first target on the upside when we break out from this sideways range. So if we look at here on the daily, sand for me, you know, is looking pretty interesting on the 4-hour. Whenever I see a pattern like this, I'm always worried that this first rally isn't going to be a new high. We're going to do a bigger A, B, C. But again, a pullback here and as an ABC that came back and held this level would be a great buy. If it breaks higher, then this is definitely one to buy the pullbacks in. 0.975 then becomes the upside in sand. Definitely like this one. Let's take a look at Mana. We haven't looked at Mana for a while. Gonna look at the Coinbase chart. We'll vary it. How many altcoins are singing this same song here? Now, this for me is a classic double bottom rounded retest. So whenever you get a double, whenever you get a double bottom look like this, your target therefore is the high in the middle, which is at 0.839. And when we go level to level to level, we're going to go from this high, level to level to level. So 38.2 was so 236 fib was resistance and support, 38.2 resistance then support, and above 0.55 we're going to look for 0.622, 0.71, and again these previous highs, because of the double bottom, is our first upside target. And then if we go beyond that, if we break our double bottom, we know that our target is twice this distance, and then really we're going to be looking for this big 236 fib, which is at 1.6. Now, I mean, that's fantasy when we're all the way down here and we've got to take out this high to change the trend, but flipping these weekly moving averages and holding above them is a really good sign that potentially we're setting this up. So Mana, for the first time in a long time, could be setting up a really nice bounce. 0.839 and gosh, 1.6 if we get above that. Now short term, we are in a sideways range. No guarantee yet that we're going to break out of it, and if we were to do a bigger ABC, it would be a buy here. But if we break these highs, as you know, if we break that 50% level, we're going to buy a pullback against it, 0.553. What do I mean by that? I mean, if we get above it, you buy against it, and we're looking for them to break up like that. So again, not quite a buy tonight, but looking very good potential, particularly with these weekly moving averages in Mana. Okay, let's look at Zilliqa. All of these have had a massive spike this week. Here's another textbook double bottom. Shouldn't we have paid more attention here? I wish we had. I wish I had, because it means what double bottom doesn't mean that we're going to be in a new uptrend, but it means we've stopped going down and we're likely to go back to the top of the range. And this is a lovely double bottom. spike low and a rounded retest. So an Adam and Eve double bottom. So if we keep going, our target is back to the highs, the top of this range, like this. And we're going to look to go level to level to level to get there. So from this high to this low. So we validated these fib levels. 236 fib was support, 38.2 was resistance and support. We're above the 50%. So here at the 61.8, as we pull back, we should see this 50% level in the middle be support. And if it's not, we're going to do one of those bigger, 61.8, 38.2 things back to the to the weekly 50 moving average and the 38.2 in a bigger 38.2, 61.8 golden ratio zone thing. So if you're looking at pullbacks to jump in on Zilliqa, we want to see, or if you're already long and you want to see it hold above this level, we don't really want to see a daily close back underneath 0.0258. That's the first support, but if it does, we come back to the daily moving averages, which we can see have been really nice support in this uptrend. So yeah, I do see more upside for Zilliqa, and I would like to see what happens when we get up to 0.039 in these previous highs. That's the first target. Now, if we get above that high, again, just like everything else, we're going to go all the way up to the next big swing for our target. Because this looks like a big, in Zilliqa, this looks like a big ABC, doesn't it? So I'm going to put the fibs on both swings and say the 236 fib would be my first target, which is 0.07. If we can break out from this sideways range. Now, it's not going to be a straight line. Whenever you do this, there are really strong support and resistance levels that could wobble you, especially like this high and low here around 0.05. And those round numbers, can be bumpy on the way up. 0.05 is a bumpy level on our way to 0.07. But this, this move here with these weekly moving averages, which we're seeing in so many altcoins, is really positive for a little bit of an alt rally. So alt season to the moon. Let's take a look at one that went today, which was KSM, and talk about the levels. Now this one absolutely exploded. Now, I was looking at KSM last week, or a couple of videos ago, because we were holding again above these weekly moving averages. And if those other altcoins that just looked at, if we work like KSM when they hold above, when they break out, they should explode. Now, if I had been talking about KSM the same way as these, I would have said, well, our first target is this previous swing high here, which lines up with these lows, which is at 49, which is kind of 50, which is that big round number thing in KSM. So as we pull back here, that's going to be the first kind of level that I'm looking at. And if I kind of go all the way left here, you can see actually if I adjust it a little bit, there is a really big, around 50, there is a really interesting support and resistance level. So that would be the first place on support that I would like to see this hold, because if it closes back underneath it, the risk here is that we end up making a really kind of big inverted head and shoulders with just a little spike, and we don't want that. So if you're long, you really don't want to close back underneath 50, and you're going to look for that level to be support. And if we hold it, where are we going to keep? Now, I've got my big 236 fib all the way up here. It's at 160, which is nuts really when you think about it. But I don't like taking, I tell you what my problem is, I don't like taking random kind of fib levels. So here we could say, well, I suppose I could go from this major swing here, but I don't like relying on them unless I see the 236 fib hold. Now, if we go from this high then, which is the high we made in March 2022, here we are at this 236 fib level. So if we were to see a bigger pullback here, and we were to close underneath this 50% and do quite a deeper pullback, then I think that we could say, well, that's validated this 236 fib. So when we buy the pullback, that 236 is going to be our first target, and then we'll go level to level to level like this and move it up. So looking for 50s to hold in KSM for more upside. Let's take a look at BNB. As you know, I'm not a big fan of BNB, but for all of the people who have said the world is ending and BNB is over and Binance is, you know, it hasn't collapsed, has it? Let's be honest. Okay, let's look at it against the dollar on the monthly chart. Now, whichever way you look at it, I'm going to say that this, in terms of monthly moving averages, we're a little bit trapped here in BNB. We're holding support really well at 200, 215. But we're not going up. First off, we need to get back above that 20 moving average. Now in this one, I'm going to go all the time lows to all time highs and see where we are. Because first time back, this 61.8 was pretty spiky, but it was support. And here we've done another swing lower. So the bullish argument here is that we've done a big three-wave correction. There's our first swing lower, there's our second swing lower. Equal measured move. And we're holding the equal measured move level. And building a base for the next, you know, big rally in BNB. But if we look at the fib levels, you can see this fib level was the previous support. Let's take a look at the weekly, see if actually, I wonder if we closed underneath it. No, we didn't. Well, it's messy. The problem is 61.8 fib levels can be a bit messy, but it was messy support and now it's messy resistance. So I'm going to say, particularly with that monthly 20, the weekly 50 moving average, this big back test of the fib level, which was previously really strong support and resistance at 269, that's what we need to get above if we're going to go back up to the top of this range, which would be, first target would be the 50% pivot level here in the middle at 352. It's messy here, but there we go, 352, and above 352, 435. So now we can say closing and holding above 269 gets us up to 352 next, and we're not doing it yet. Let's put a Heikin Ashi on here, this 4 hour. Are we holding this level? I don't know. Let's say if we get a breakout and hold above 269, 352 is where we're going, but at the moment haven't quite got the breakout that we're looking for, have we? We've just got a nasty sideways range. So a break above and then hold. It's when we're washing through this level, which does I always makes me kind of nervous. I want to see us big move and then hold above it, not back to the bottom of the range. So potentially that's what I would like to see in BNB, holding above 269. Then I think, yeah, 352 next and looking pretty good. Let's take a look at ARK. Well, that 4 hour says it all. Really kind of nice base building here. Now, I'm just going to make sure I haven't got more. Make sure I don't need a bit more history. No, not much more, is there? Okay. Because of this random scary spike, I'm going to go from this low to high, and we're going to look at the retrace levels. Don't have any weekly moving averages yet, but if we look at our daily moving averages, had a little bit of a bearish cross. Now, here we are at 61.8 fib level. Happy days. And this 236 fib was a little bit messy at first, but I'm going to lean on it. I like how this 50% behaved. And so, yeah, we can say more upside and a bigger bounce. We'll go to the, because we're at one of those 618 fib levels, our first upside target, if we can hold above this daily 20 moving average, is going to be 1.13, and then above there 1.30. And we could potentially do this bounce and do this 61.8, 38.2 thing, because it's the golden ratio zone, unfortunately. So yeah, I do think there's a good chance that we continue higher, but I'm not going to get excited unless we get and hold above 1.13 that we're on our way up again in this one, because I do think there's quite a risk that we could bounce here and then still do another leg lower. So yeah, probably not my first choice yet, but definitely above 1.13 and holding above 1.13. What tends to happen in a golden ratio zone like this, you'll go all the way up 38.2, and then you're going to look for this 50% to be support if we're going to go continue up again. So yeah, looking all right, but not necessarily convinced of a bottom yet. Let's take a look at Waves. Haven't looked at waves for a while. Feels kind of cool, all these old school coins bumping again. Now, we could draw this as a kind of triangle consolidation. Certainly for this trend line from this high to low, we did get 3 touches and now we've broken out and we're going higher. But what I also kind of like about this, I've got my fibs on the big swing in the middle here from the high to the low, and all of these levels were validated really nicely. This 236 fib was here with a big deep retrace, 38.2 resistance and support. Same here at the 50%. So here we are holding above the 61.8 following our breakout. So for me, more upside. Holding above 255 means 2.9 next. And for me, if you know, the 786 is a bit of a key. If we get above 2.9, I think that we keep going and retest the highs. And because this is a double bottom, you can see very nicely double bottom swing failure pattern here. I am going to look for 3.385 because, you know, double bottom, you tend to test that level in the middle. And then when we get there, if we break out from this sideways range, gosh, look at that lovely weekly moving average at 8. Well, let's put our fibs on all the way and see where that 236 fib comes in. 16. Wow. Well, really, you know, that's mad. Well, not mad. It's certainly achievable in crypto. But we're not going to get there in a straight line. So I would say we'll take this lowest swing here, I think. 3.66 and then the weekly 200 moving average, and then we'll go level to level to level. For now though, yeah, anytime you see a double bottom like this, your first target really should be the top of the range, and that looks like where we're heading. And I'm going to stick to level to level to level in the short term down here at the moment, and say 2.92, then 3.13, and then a retest of the highs. And let's see if we can break out of this bottoming range in waves. Okay, let's take a look at OMG. Go. Haven't looked at this one for a while. So many of these altcoins make lovely. This is not a double bottom or anything, but this is kind of a lovely rounding bottom. And what's happening here with these weekly moving averages is really interesting. Holding above the weekly 20 up to the weekly 50. If we hold above this again, I'm going to look for these previous highs and potentially the weekly 200 moving average. Let's drop down to the daily. You can see we've had a lovely bullish cross of all our daily moving averages. So just like everything else, most recent swing lower, fib levels, here we are sideways at the 236 fib. So if we can hold above 0.9, as in find support and launch off it, I think 1.21, 1.46 and so on, we'll go level to level. 1.21 is really interesting support and resistance up here as well. So yeah, very tempting. Don't want to see us fail at 0.9 though, or you know, potentially, because it is such a big fib level. And if we look at this, you know, on the weekly, you can see we haven't actually on the weekly managed to close above this level. So that's cool because it's tonight, the weekly close, isn't it? So weekly close above 0.9, holding above it and holding above this weekly 50 moving averages takes us to 1.2, then 1.46 next, and potentially above there all the way back to these swing highs around 2.5. So this really is the danger level there. I can't say that OMG has bottomed unless we can hold above here because of this weekly 50, because of this 236 fib, and because technically we haven't even flipped the weekly downtrend unless we can do that. So that's where we are with that. OP, let's take a look at OP. Ta-da! Looks amazing. Now, holding new highs. OP, this is against Tether. On this weekly, because it looks like we've done kind of big three-wave moves, potentially this is a big swing lower, and then I'm going to go like this. So here's our big three-wave lower. Potentially, we have in OP just done a big equal measured move, rallying from the June 2022 low to the February 23 low, projecting it from here. This is the equal measured move level at 3.78. We need to hold above 3.78 if we go to our next target, 4.5 and then 5.5. If we do a bigger retrace here, first of all, I'm going to go all the way from this low. Now, if this is going to be, you know, kind of a wave that I should put it on this swing like this. If I'm wrong, this is just going to do 1, 2, 3, 4, and a fifth wave. The most common retrace of a wave 3, or particularly here from this swing low here, is the 38.2, which would mean back to 2.8. And 2.8 also, if we look at this big weekly candle we've got, it hasn't closed yet, but that's kind of going to put us 2.8 is around where the 50% is of this big green candle. So we're going to stay bullish if OP can hold 2.8. Otherwise, we could see a bigger pullback to 2.6, and underneath there, that would confirm that this was just a three-wave correction and not a new upswing for OP. So this is quite a long tail, but not weird for OP, but a little bit of a pause level. So yeah, let's just see that 2.8 level can hold on any bigger pullback and go from there, because we've completed, look, 5 waves up here, 1, 2, 3, 4, 5. If we just hold this swing low and go higher from here, that would be super bullish. That's also the 4-hour trend, isn't it? And the 20 moving average and so on. But because we've completed 5 waves up, we could see a little bit of a bigger pullback to 2.8. So not a great place to buy this without a bigger pullback, either a pullback or a breakout. If we break out above 3.8 and we hold above it, then you can buy against it as a level, but just one of those levels where we could see a bit of a bigger pullback in OP. Let's take a look at Arbitrum. Let's take a look at it against dollar. Just going to make sure that I have the best history. Yeah. Now, whichever way you look at it, this is making quite big 3-wave moves, and this was certainly a big 3-wave pullback. So I'm going to put my fib on both swings of this correction and see where we are. Did we validate it? We certainly did with this 236 fib here and this 38.2. Here we are at the 61.8. So if we're going to keep trending higher in Arbitrum, we're going to hold this 50% pivot level. And if we're going to do one of those golden ratio zones, 61.8 back to the 38.2, underneath 1.27 means all the way back to 1.15. So because these previous fib levels have had a bit of a reaction, we need to be a little bit careful here and say, if you're long and holding, that we are going to look for 1.279 to hold as support to keep going higher, and watch out underneath there. We will see a much bigger pullback. It does look good though, doesn't it? So 1.279 would be the level I'd be watching in Arbitrum. to hold on a pullback for more upside. Solana has been amazing, but I'm not actually, there's not really a but for Solana, but when we last looked at it, we said, right, holding above this 236 fib level should take us to the 38.2 fib level next at 1.06. I've drawn my fibs on the weekly in Solana from the high that we made in November 2021 to the low that we made in December 2022, and we validated these levels pretty nicely. Now with the 236 fib, we blasted above it and held above it and kept going, and I think these red dashed lines are just support and resistance where we might wobble. So for me, I'm looking for this to do the same, to keep going to the 50% level. So 106.67 should be support here, because we have reached a maybe, you know, these lows and highs here. We have reached a weekly support and resistance levels. So I'm looking for yesterday's high, today's low at 106.67 to hold as support in Solana if we keep going to 137 next. Now, one thing I also like to do is kind of measure the swings. So I'm just going to go back to the weekly. As you know, I think they tend to have a mathematical relationship. So I measure this first swing from this low to high from here. Yeah, this 2.618 was pretty strong. Equal measure move was pretty strong. Deep pullback. You know, I think if we lose 106, then 50% of this big weekly blast up higher that we had would be the next support level in Solana, 93.98, 93.98. It would be 50% of last week's weekly really strong move. And I think more than that, yeah, we can talk about maybe the top is in Solana for a bigger pullback. So two trend supports to look to hold, you know, if we're going to keep blasting 106.6, but if we get a bigger pullback here on the scale of this wave 2, then potentially 93.98. At the moment, I'm going to lean towards this higher one at 106 holding, and we keep going. Unless the market tells me otherwise. Okay, let's take a look at ICP. You know, when I lost quite a lot in FTX, as you know. One of my biggest holdings was Solana, and it's kind of left me a little bit battle scarred, which it shouldn't do, but the worst thing you can do, you know, the worst thing I can do with my Solana holdings is work out what it would be worth now if I still had it, but we won't do that. Okay, so ICP, big blast last week and a little bit of a pullback here. It has flipped the weekly trend. We've flipped these weekly moving averages. So one of those reasons, you know, all those altcoins that we looked at holding above these weekly 50 moving averages, if they all blast like ICP has, happy days, right? We flip the, you know, if you think a trend is lower highs and lower lows, you flip it when you take out the previous swing highs. So we've done that here. So now we need to see a higher low, and then we keep going higher. So I do think this looks very nice. I'm going to take from this most recent swing. It's hard to draw fibs with a... I'm going to go, let's look at this on the daily and look at just support and resistance, because ideally where the daily 20 moving averages and this swing high around 7.9 would be kind of my favorite first place to look for this on a pullback. Let's make sure that I've drawn this right as well. So yeah, not quite the 38.2. Are we going up again? This makes me think that we're doing a correction. We're going to do an ABC and another leg lower, unfortunately. Mainly because we didn't, you know, the best corrections or the best places to buy previously in this, once one starts, are pullbacks to this daily 20 moving average. and we're a little bit too far away from it. So either we're going to go just sideways here and wait for this moving average to catch up, not there yet, or we're going to make a bigger three-wave correction back to that 20 moving average. So for me, I do think it does look really bullish. I'd like to see, though, a bigger three-wave pullback. And so I'm not convinced that we're on our way up again with this move today yet. Now, it might keep going. I might be wrong. Let's take these fibs off. Let's look at it this way. When I'm not sure, I put these short-term ranges on. Here's our first swing to the 61.8. For me, a bearish Gartley here would be a three-wave rally up to this 786 fib level. 786 or 886 at 11.17. So if you're going to look for another level lower to begin, potentially it's from there. But clearly holding above 11.17 and new highs, more upside for ICP. So potentially the correction's over, but I'm going to be a little bit more careful with this one, and I would like to see 11.17 blasted through. If we take a look at CFX here on the weekly, gosh, looks pretty nice, doesn't it? Now, if we can take out these weekly moving averages again, which, you know, when we tried at the beginning of November, the weekly 50 moving average was pretty tough resistance. We couldn't get above it. Are we going to have another go and break out here? Let's have a look see, and let's see where we are from the low to high, 786. So we can also say above this 61.8 fib level on the back test is going to be a pretty nice breakout. It's a 0.1998. That's what I'd like to see this close and hold above. And if we can hold above 0.1998, because we're reversing at a 786, first target will be a 38.2 up here at 0.309. That's the target. So the trade is between these two levels. Next, if we can get here and a breakout, and so far no banana, but that's really what I would like to see. And the risk is, let's look at this on a 4-hour. The risk is that we've done a swing of correction, back tested the resistance, and we're going to see another leg lower before we go again. So holding above 0.1998 would be bullish for me, and that's my first target all the way up here. Bit of a wobble in the middle at 0.25, but that's going to be the target for CFX. No breakout unless that happens. Let's take a look at AVAX. Haven't looked at this one for a while. And boom, proper blast. Now, if we see where we are with retrace levels, we have taken out our 236 fib level. So for me, on this basis, we're headed to 60 next, which takes us to this swing low and this swing high. Pretty cool level. Sometimes though, I do like to look at the fibs going the other way, see if there's any kind of pattern here. And there is, because this was a 942, that normally gives us a target, the 61. So this actually means that we kind of agree on these targets, which either way we look at it. So somewhere between 57 and 60 is the next upside target for AVAX. Now that doesn't mean we're going to get there in a straight line. We could actually, you know, see a little bit of a wobble pullback. Let me tidy up here. Start again. Okay, from this high to this low. Look for this 236 fib level to really, and these previous swing highs, we really shouldn't go back beneath that 41.62. So on any pullback, that's kind of where starting. I don't think this is a little bit double toppy, but it could be. We need to be a little bit careful that this doesn't turn into a little bit of a double top, because then we do that kind of bigger ABC, and then we could definitely come back to that 41.62 level. Let's get this level, there we go. So we really need to exceed and hold above this high, which is at 48.88. Above 48.88, obviously keep going. We're going to 60, aren't we? 60, 62 up here. So I think I've not probably drawn that quite right. Let me make sure. No, got it. There we go. Okay, so buy pullbacks, keep going in AVAX, looking for 60 next. But watch out, probably not today, looking a little bit double toppy unless it breaks higher. Let's take a look at MDT. Now, MDT on the weekly. Going high. This is one of those, so really big three-wave corrections. And if we measure them, so if I measure from this low to high, project it from here, this equal measured move was where we failed. And when you do that, you know, and you get underneath the 61.8, which we did here and we couldn't close, unfortunately, the most common retrace of a pattern like this is quite a deep 786 fib, which would mean down here, and we're not quite there yet. And now we'll probably do it in three waves as well. So it would look something like we've had our first pullback, we're going to have a bounce and something like that. Now, I am wrong about this. If we can get back above and hold above that 79.29 level and these highs here. Because at the moment, this is looking like, wash, was this a bit of a bottoming pattern and a false breakout. So, you know, at the moment this looks like a false breakout, doesn't it, above 0.079. So a real breakout and holding above 0.079 would be pretty bullish. So watch out for that to be resistance and one more swing lower before this is over. If you're long here, like, and you like this, and it's not short term, it's a bit of a tricky buy here for me. From this high to this low, we're kind of sideways. Flat moving averages means no trend. I'd like to see it break out above this high, above 0.068. Gosh, it's not looking terribly. And those 4-hour moving averages are not convincing for me. I'd really like to see us hold above them first. So yeah, I'm afraid I'm not. If you are long of this one and you'd like a bounce to get out on, watch for a retest of that 0.079 level to sell some. If you want to trade this on the short term and we can break out of this choppy sideways range, that would be my upside target in MDT. Let's take a look at CTI, Clintex. There's another one, 4-hour moving averages, daily 20 moving averages, resistance, just going sideways. Now, this one though, it's not so bad, is it? On the daily, broken above all of our daily moving averages, we're looking to pull back into them and see if we can go higher again, and this potentially be a pretty nice fourth wave. So then we have wave 1, 2, 3, 4, 5. Now I know we've pulled up into this wave 1 high, but quite often in a leading diagonal wave 1, you can do that and it's not terribly illegal. If we look at the weekly and we look at weekly moving averages, potentially we are holding this weekly 50 moving average, so not a terrible idea. I'm going to put my fibs on from this big high to low here, see kind of where we are. And on the weekly, we could not close above this week 236 fib retrace level. This was a bit of a false breakout. So we are going up again for real if we can get above and hold above that level, which is at 0.0255 in CTI. And then hopefully this would be 1, 2, 3, 4 and another big wave higher. And then I'd like to see, because this was the 38.2 here, I'd like to see this 50% next, maybe this 61.8. So 0.042 or maybe 0.05 targets. But if I look big picture at this first big rally, and this would then be, look, a big rally, three-way pullback, these two swings then should have a relationship, shouldn't they? So if I measure from this low to high, project it from here, that's 61.8 then, and 0.05 to 0.053 comes more likely a target on the next swing. And that's our first bearish target. Our next more bullish target would be an equal measured move, and so on. So yeah, holding above 0.0255 says up we go, and more upside, and likely 0.05, 0.053 next, but 0.0255 pretty tough resistance that we need to overcome in Clintex CTI. Okay, next one we're going to look at, oh, in fact we've done ICP. So yeah, there are some pretty nice opportunities out there. I'm going to take a look at one more, which is Alephium, ALPH. On gate, here we go. Oh, what a lovely move in Alephium. Now, from this high, we've got, you know, my biggest favorite fib retrace is a 50%. But I'm a little bit unsure about this one, mainly because I didn't get the reaction that I would normally want to see at a 236 fib here. And I'm thinking maybe these other two levels are working, but it's not super clear. So I'm not going to lean on this 50% level. In fact, I'm going to take it off and go back to the weekly. And when I'm not sure like this, I kind of go projected moves. So here's a big rally, three-way pullback. And so I'll measure the first swing like this. Here's our three ways back, and I'm going to go level to level to level and see, did they work? And the answer is, it looks like they did to me. So as you know, I look for the equal measured move. It didn't, it was support though. 1.618 is a good target for a wave 3, and 2.618 is a really good target for a wave 3, and if that goes, it's 4.236 next. So 1.11 therefore in ALPH's resistance, and 1.72 is the target if we can keep pushing above this. Okay, but if we have completed a wave 3 at this 2.618 extension, which would be pretty common, the most common retrace of this big swing that we're in is a 38.2. So I'm going to put my fibs just on this swing. Okay, and we're going to say 0.9 is the trend support. We are still going up. If we can hold 0.9, maybe 0.87 if the market is going to look from here. And underneath 0.9, more likely back towards 0.75, 0.73. And this would be the most likely retrace. But this was certainly underneath 0.09, sorry, underneath 0.9 would say that we're in a bigger pullback underneath this swing low as well, or underneath the daily 20 moving average. We are kind of at one of those levels where we might do that. For now though, in terms of daily candlestick patterns, just pulling halfway back of this big thrust candle is not a bearish reversal. Now, if we retested the high and double topped or something, I might say a bigger pullback here. But yeah, and holding above 1.11 gives us 1.72 next. Underneath 0.9, 0.87, just a bigger correction. Not a top or a bearish reversal. I would think that this would be kind of a more of a wave 4. So this would be 1, 2, 3, 4, and then continue higher. Hopefully that's Alephium. Okay, one more we're going to look at Dymo. Okay. Now this one is having quite a sharp pullback. However, holding this daily 20 moving average is not terrible. And if I measure the whole rally, let's look at where we pull back to. Because, you know, that 50, 61.8 thing is not, it's very common in a trend. And that's exactly kind of where we have pulled back to. So if we look at this on a lower time frame here, you know, when you bounce from a 61.8, even if it's messy like this, above the 50%, 38.2, then this 50% becomes resistance. If we look at these 4 hour, these moving averages are not quite set up yet. It's quite often when they look like this, you might see a bit of a bigger pullback before you go higher. We could still see another leg lower down to this 786, but for now, I'm going to say a close and hold above this important pivot level here in the middle at 0.456 takes us higher to 0.547 and potentially a retest of the highs and higher in Dymo. So really key level. Holding above 0.456 goes 0.547, 0.6459 and so on higher. So yeah, that's how I'm looking at those. Got a couple more requests just coming in last minute. Let's take a look at CGPT. Oops, typed it wrong. Okay, gonna look at Bybit. Now I'm gonna start with the weekly of this one. Looks pretty cool, doesn't it? And it looks like that because I like how we're holding above this weekly moving average, and I like this sideways consolidation. It's pretty bullish. We haven't given back anything in terms of candlesticks. You know, when you have a big thrust candlestick like this, if you measure the open close and you don't close more than 50% back on it, these are just kind of bullish haramis, bullish inside bars. They become bearish if you close underneath the 50%, and you can see how many times we've tested this 50% level in the spin support. That's at 0.112. So, and if we look at this on the daily, you know, you can see textbook, very nice support at this 0.112 level. So for me, this is just bullish consolidation before hopefully we continue higher. We're just getting our breath back. Now, if we go level to level to level from the highs after this big 3-wave pullback here in CGPT, we have reversed at the 38.2 fib and we're holding support at this 236 fib. So a retest of the highs means 0.168 and above it means 0.209 and then 0.25 next in CGPT. So yeah, wait for buy entries. And at the moment it's all very choppy sideways correction, and we have just done a little bit of a swing failure double top here on the 4 hour against last Wednesday's high. So whenever you see that, it means we've stopped going up. Doesn't mean we're going down, it just means we've stopped going up. So this is really a bit like Bitcoin, isn't it? It's really frustrating. And potentially we could still come back to these lows and retest them. Or we could just go back to the bottom of this sideways range, which would mean back to 0.134 and then up again. So, but buy pullbacks, and look for a retest of 0.168 and above it 0.209 and then 0.25 next in this lovely bullish consolidation in CGPT. Let's look at one more. In fact, now I've got them all. Okay, I hope that's useful. Let me know if there's anything else you're going to look at. I'm not going to do an update tomorrow, which is Monday, Christmas Day. But I will with bells on, and of course the US markets are open again on Tuesday. So we'll get going then.